Good afternoon, and thank you for joining us today. My name is Alina Islam, and I'm a mining analyst here at Red Cloud Securities. I'm very pleased to introduce Noram Lithium to you today, a lithium developer advancing the Zeus Lithium Clay project in Nevada. For the webinar today, we have with us Greg McCunn, CEO. Greg will provide an introduction to the company, including an overview of activities currently underway at Zeus and catalysts that may lie ahead. After the presentation, we'll take your questions live. Please send us your questions via the chat box and we'll get through as many as we can. Before we get started though, I do need to mention the fine print. For Noram Lithium, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Noram Lithium corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Noram Lithium specific disclosures. With that, I'll hand it over to you, Greg. Please take it away.
Thank you very much, Alina, and thank you everyone for taking the time to hear the Noram Lithium story. As Alina mentioned, we're focused on advancing our 100% owned Zeus Lithium Project. It's located in Nevada. And thanks for taking care of the fine print, Alina. We will be making some forward-looking statements during today's presentation, and feel free to review these on our website. This presentation is also available there, noramlithiumcorp.com. We'll just start with a little bit about the company in terms of its capital structure and shareholdings. I think most importantly, Noram is well financed. We started the calendar year of 2023. These are Canadian dollars on the right-hand side of this slide, with about 14 million in cash in treasury. And of course, no debt. So reasonably well financed. We'll outline our program to de-risk the Zeus project in 2023. We've got a budget to spend about 50% of our treasury this year, ultimately culminating in a pre-feasibility study for Zeus. So well financed this year and even into next. That financing was raised through one strategic investor. You can see here on the right-hand side, the Lithium Royalty Company invested about 16 million Canadian into Noram early in 2022. Most of that treasury was still intact in early 2023. As a result, Warritos / the Lithium Royalty Company hold just under 16% of the equity. Insiders and management, including founders of the company who sit on our board of directors, hold a reasonable stake still in the company of about 12%, and the other free trading float of about 72% is largely retail investors, about 50% of those in Europe and 50% in Canada. Hoping to add your name here, Alina, as you pick up coverage on Noram in the coming months to analysts who cover the stock, and thanks to Red Cloud for having us here today. I'll just start with a high-level overview for those of you who are new to the Zeus Lithium Project and the Noram story. Zeus, as I mentioned, it is located in central Nevada. It's about 50%, about halfway, between the cities of Reno and Las Vegas. So access to the project is very straightforward, located off of the main highway connecting those two cities, about 35 to 40 kilometers from the closest town of Tonopah, which, as those of you who follow lithium are familiar with, this is a bit of a lithium hub right now with a number of projects advancing. And of course, the only operating lithium producing mine in the United States right now is immediately adjacent to the Zeus project. It's Albemarle's Silver Peak mine. You can see in that aerial photo on the right-hand side of the graphic here, those green ponds are the evaporation ponds. Albemarle's Silver Peak mine is a lithium brine producing facility. It's been in operation for just over 60 years. The Zeus project is a lithium clay deposit. So it's located just slightly up in elevation from the bottom of the playa where the brines are being pumped up on a gently sloping valley floor into the sedimentary clays. And Zeus is essentially outcropping its surface. So Realistically, when we look at this, we've drilled here just under 5,000 meters in 6 phases of exploration. We've fully outlined here one of the largest resources in North America for lithium, which we'll talk to you in a subsequent slide with those 5,000 meters of drilling, which seems, to those of you familiar with the mining space, not a lot of drilling, only 82 holes to outline what here is one of the largest resources in North America, as I mentioned. That's because the deposit is sitting very close to surface. Essentially between 80 and 120 meter drill holes have completely delineated the deposit. Most of those holes did finish in mineralization, so it is open at depth. But as you'll see here, we've kind of moved on from exploration. We now have over 1 billion tons of measured and indicated resources here, which will provide about 130-year mine life. So although there is exploration upside, we're not focusing on adding more resources to an already strong resource base. And we've focused our efforts now on completing, as I mentioned, a pre-feasibility study later in 2023. We'll talk about that in a moment. So I'll just start by highlighting the resource that I've mentioned a couple times now. As I mentioned here, this was updated recently based on a 6th phase of exploration, which was carried out in mid-2022. The purpose of that 6th phase was really to infill drill a number of inferred resources that we had, improving the confidence and upgrade those inferred resources to measured and indicated. You can see here the program was successful, outlining just over 1 billion tons of measured and indicated resource. Collectively, that billion tons grades around 940 ppm lithium. So if you wanted to look at it on an apples to apples basis with other lithium projects, the contained lithium carbonate equivalent, LCE, in this deposit, about 5.2 million tons of LCE contained in the measured and indicated resource, and another just over 1 million tons of LCE contained in inferred resources. And that puts Zeus right up there with some of the largest lithium projects going on in North America. Some of you are familiar with, like Thacker Pass, obviously the biggest, owned by Lithium Americas. So where we're at in 2023, as I mentioned, we have sort of moved on from exploration. Following that phase 6 of drilling and the update to the mineral resource, we now are using that mineral resource that we've just looked at on the previous slide to advance the further de-risking of the project. And we're also basing the work that we're doing here in 2023 on a very successful preliminary economic assessment that was published prior to the phase 6 exploration and has now been displaced by the updated technical report outlining that mineral resource on the previous slide. But that preliminary economic assessment basically envisioned for Zeus a 17,000 ton a day processing facility. That's about 6 million tons per year of ore being processed through the processing facility. Basically, with the clay deposit, we're looking at leaching with sulfuric acid, purification of that leach solution, and production of battery-grade lithium carbonate at the mine site in Nevada. And so what was envisioned in the PEA is producing just over 30,000 tons a year of lithium carbonate equivalent. And that would, if that was running today, that would be producing about 5% of the world's lithium carbonate supply. So this is a meaningful production facility that's envisioned here. And at those processing rates, as I mentioned, there'd be well over 130-year mine life. So Zeus is a large project. We're starting to move it now through the phases of de-risking. And first and foremost, we'll talk about each of these de-risking items that we have on the right side of this in the separate slides coming up. But we are looking at optimizing the deposit around the high-grade core. So focusing on the first 15 to 20 years of mine life at Zeus and trying to make those as the best margins possible to pay back the capital as quickly as possible on the project. We've also launched the 3rd phase of metallurgical testing to really prove up the flow sheet. But as most of you follow the lithium space will see, there are lithium clay deposits now in construction, including Thacker Pass. Rhyolite Ridge is very close to starting construction, that are being financed and being moved in towards production. This flow sheet that we're proposing here, very similar to both of those projects. So we're now seeing the industry de-risking itself somewhat as well. So as we start to publish our results here in the 2nd quarter, we believe those will be a strong catalyst for the stock. And ultimately, we're going to combine that with some work that we're doing on the hydrogeology of the basin, securing our water supply for the project into a pre-feasibility study, which we've now kicked off with the engineering firm Alsenco. All of that we expect to complete in 2023. So one of the unique features of Zeus, as I mentioned on the previous slide, is it does have a high-grade core. And so what you're looking at here on this graphic on slide 7 is a color-coded plan view overlay of the Zeus concessions. The colors represent grades that are in the resource that you saw on a couple slides previously. The cool yellow and green colors are the lower grades of the resource. The dark or deeper purple colors are the high grade. And so you can see there in the center of the concessions, the outline of a very large high grade core. You know, this system on paper here is over 1 kilometer wide. It's about 2.5 kilometers long in the high grade core. And in sections, it's up to 60 meters thick. So all of this has some portions of it outcropping at surface. So very easy to get into and start. And you know, and often in a project, you're looking for 18 to 20 months of high grade to start the project off and get it started on the right foot. Here, you know, if we looked at an example from the resource estimate of a 1200 ppm lithium cutoff, you know, we've got almost 170 million tons, grading 40% higher grades than the average resource grade. So that gives us, you know, more than 20 years of mine life, and it would effectively be the entire project from an NPV and IRR perspective. So this is a very important step in the project. We believe we can create a lot of value by optimizing this. We've engaged SRK Consulting out of Reno to help us with this. And then we're expecting some positive news flow out of this in the coming 6 to 8 weeks as we start to develop the mine plans and build around the resource estimate for this high grade core. Further on the process side of things, as I mentioned, we've started a third phase of metallurgical test work building on the previous 2 phases, the most recent of which was conducted last year. And the first 2 phases were really around outlining the process flow sheet. And so what we've got here on slide 8 is a simplified version of the flow sheet. We broken it down essentially into 3 line items. The top line item being the preparing the clays that come out, that are mined from the ground, getting them mixed into the slurry form with water. The second row of this flow sheet, the leaching, the dissolving of the lithium, and the purification and removing the iron and aluminum, separating that iron and aluminum waste, which goes to a dry stack tailings facility from a filter press, into a more purified lithium solution, and then eventually purifying that lithium solution further to produce a battery grade lithium carbonate on site. Now, all of these items that are on here are items that are done in other industries and other places in the world, or in other lithium projects. The top item is really focused on trying to reduce our acid consumption. That's our biggest operating cost here. That test work is currently underway right now on fresh core samples that we've taken from our storage facility in Tonopah and shipped to the laboratory. We're hoping and we're encouraged here to see our acid consumption potentially be lowered by between 20 and 30% without any significant losses by rejecting this acid consuming calcite material. The center part of the flow sheet, the heart of it, the leaching and purification, is now, the test work there is well advanced. We've been carrying out scoping tests on leaching, improving our understanding of the recoveries here, which are very strong. We're recovering, you know, around 90% of the lithium in about 30 to 40 minutes of leach time. So this leaches very well, and we're having great success removing iron and aluminum from solution, producing a clean filterable product that settles well and filters well so that we can wash it and minimize lithium losses to tailings. The bottom row on that flow sheet is what's conventionally done in lithium brine operations. So there's less technical risk and less engineering data required, pardon me, on that bottom row of the flow sheet. But at some point in this test work program, we will demonstrate that we can produce a battery grade lithium carbonate product from solution. Right now, we're focused on the center of that flow sheet, and you can watch for some exciting news coming out of this part of the process development, again, in the coming month to 2 months from Noram. And as I mentioned, all of this will be wrapping together into a pre-feasibility study. Just briefly, we are doing some engineering work with Ausenco prior to doing the start of the pre-feasibility study. We're looking at any kind of value trade-off studies, incorporating some of this metallurgical test work and making sure that we have the flow sheet fully delineated before we kick off the official PFS in more vigor, and including optimizing things like around the acid plant, et cetera. And why we're focusing on this pre-feasibility study, which is with a high level of a degree of engineering here and caution and care, is that we're expecting, as I mentioned, to complete this year. And heading into 2024, our plan for Zeus is to carry out our definitive feasibility study and our permitting in parallel. And so that requires us to have a very solid pre-feasibility study to be able to do that. And so working with Ausenco, we're expecting to develop a very robust pre-feasibility study that outlines the economics for the project. Just quickly going to touch on ESG. It's been very interesting. There's a number of emerging, ESG stories around lithium. Obviously needed for electric cars. The supply side is dramatically trying to catch up with the ever-growing demand for lithium and racing to secure resources around the planet. And the ESG lens is now being shone on some of the lithium producers, including spodumene or hard rock lithium producers, as well as the carbon emissions that are generated through producing lithium from the brine operations. And if any of you are following this, I think this is boding particularly well for clays. We do have very minimal impact on lithium clays because we have a very low strip ratio here at deposit outcropping and surface. We consume very little water. It all gets recycled, and certainly we don't discharge any liquids from our process. There's no effluent here, and we're dry stacking the tailings for long-term storage. But most importantly, because we're producing a finished product, 99.9% lithium carbonate on site for sale directly to auto manufacturers, that reduces the carbon footprint of production here dramatically. And so I think we'll see clays continue to rise to prominence, not only for their strategic benefits being located in the United States, but also for their environmental benefits, in particular the low carbon footprint as auto manufacturers move towards reporting carbon emissions per vehicle by 2030, pardon me. And I think further this is outlined, I'm sure you guys are familiar with the headlines, people who have been following this space. Two projects in particular are getting a lot of attention in the press. General Motors recently invested $650 million in the Thacker Pass project. That project is now under construction. As well, the Department of Energy provided a long-term, low-cost financing on the debt side to provide the other piece of capital for Thacker Pass. They've also committed almost $700 million to Ioneer's Rhyolite Ridge project, which is also located in central Nevada. So there's a lot of activity going on in the clay space. These deposits are very strategic, not just to our company, but to the United States in general. And I think we hope that that Zeus will be one of the next projects in line for this type of financing, securing low-cost project financing to put the mine into production. So just to conclude, why invest in Noram? Just a couple points here I think we've touched on. I think the location of this deposit, very strategic right now, being located in the United States in a very mining-friendly, location in Nevada, where there's already an operating mine and strong support from local stakeholders in putting a mine into production. We've got a large resource here that will be mining lithium for a very long time, for probably as long as it's needed. The company itself is well cashed up to execute on our program here this year. We don't have any need to raise financing in 2023, and we've got a program here to completely further de-risk this project as we advance it through the next phases of engineering. And I believe truly here that the company does have a two-tiered re-rate coming as we're getting out with Red Kite and helping me to tell this story. We're starting to meet a number of new prospective shareholders. I think the company is largely unknown and amongst some of its peers. So just even getting Noram re-rated to where our peers trade, I think is a step one of a re-rating. And then as we continue to de-risk the project here in 2023, we'll see further re-rating of the stock. against what we hope will be a rebound in the lithium prices, and certainly we're highly leveraged to those lithium prices. So that's all I had for the presentation today, Alina, and happy to take and spend time with questions as you see fit.
Well, thanks a lot, Greg. That was a great presentation. So we'll start the Q&A portion of the webinar now. Just as a reminder to everyone, you can type in your questions into the chat box at any time. So Greg, I do have a couple of questions here. So you mentioned you have 14 million in cash. What's your budget for this year?
So our budget for this year that was approved by the board in January was between 7.5 and 8 million Canadian. So like I mentioned, we expect to spend just over 50% of our cash balance in 2023, delivering the pre-feasibility study, the optimized flow sheet with the metallurgical testing, and obviously the optimized mine plan with SRK.
Okay, all right. So, you'd mentioned as part of your optimization studies, you're looking at acid consumption. So if we go back to the PEA, your op costs in the PEA were approximately, was it 3,300 per ton?
Correct.
So, if you're thinking about lowering your consumption there, how would that impact the costs?
Yeah, so substantially. So first of all, the PEA was done about a year ago, and obviously preliminary economic assessments are very high, high level engineering studies. It did outline an operating cost on average for a 40-year mine life of about $3,300 per ton, and that's per ton of lithium carbonate equivalent. Acid is trending to be about 20% of those operating costs. It's a huge part of our operating costs. So the PEA did not assume a feed preparation or beneficiation step in the flow sheet. This is something new that we're testing, something that's worked well for Thacker Pass. It does upgrade the lithium grades slightly because you're rejecting some of the material, so you're getting better grades feeding the leaching circuit. But the real purpose is to reject some of the coarser calcite material, which consumes most of the acid. So right now, we have an advantage over Thacker Pass that our acid consumption without any beneficiation or removal of calcite is about the same as theirs after, which is about 500 kilograms per ton. We're hoping we can reduce that by 20 to 30%. So that would have a knock-on effect of 4 to 5% on our operating costs. Having said that, I do think, Alina, that if you looked at some other studies that are more recent in our PEA for clay deposits that have very similar flow sheets, we're seeing operating costs of between $6,000 and $7,000 per ton of LCE for these types of flow sheets. That gives us a margin. We're using a long-term lithium carbonate equivalent price of $14,000 a ton, which, as you know, is very conservative. It's about half the current spot price, which is at a 52-week low right now. So we do feel like we've got probably slightly higher operating costs coming out of it as we do some more detailed engineering that will delineate the flow sheet a little bit differently and include some of these other steps. But we've got some offsets like reducing some of the calcite. So we'll see how it all comes out in the wash. But all in all, we're still expecting there to be very strong margins here against any reasonable lithium carbonate price assumption.
And then how about CapEx? How do you think that's going to shake out?
Yeah, so one of the nuances, so the preliminary economic assessment capital cost for the 6 million ton per year processing facility was 530 million. Those are US dollars. And again, that's based on preliminary information, and you're seeing some benchmark studies that have capital for those size of process plants coming in between $700 and $800 million. So, sort of 50% higher than we had in the PEA. What we're looking at right now as part of this optimization around the high grade core is a trade-off between the size of the plant capacity. So if we're able to feed 50% higher grades to the processing facility for 20 years to start this process, to start the startup of the mine, we may be able to build a much smaller processing facility, say call it 4 million tons per annum instead of 6, and still produce the same amount of lithium carbonate because you've got much higher grades going in. So we'd still be around that 30,000 tons per year of lithium carbonate equivalent production, which is meaningful. So where that's the trade-off, part of the scoping work that we're doing with Alsanco now, And that may bring us back down into a much more manageable capital cost region for the company. But fortunately here we've got the Department of Energy with, I believe, about 16 billion available to finance these types of projects. We've been in discussions with them since I joined the company earlier this year. We certainly would qualify for a project loan for up to 75% of the capital at incredible terms. We're talking 9 to 10 year term loans with interest rates at treasury rates plus 10 basis points. So very favorable type of project financing is available, very doable for a company like Noram.
That's great to hear, Greg. So what about, are there other big bucket items you can mention in terms of, optimization that you're looking at?
Yeah, I do think that the solution to water supply for the mine is going to be very important. That's going to be a very important catalyst. And we're looking at a number of different options for that right now, including we have an application in for water rights in the valley. But as most of you probably know, the Clayton Valley, with a brine operation in the center of it, Albemarle, who are one of the world's largest lithium producers, have the rights to pump the brine, which is effectively the water in the valley. So that they've had those tied up for many, many years. So we're working both with Albemarle, trying to find a commercial solution to allow us to potentially recover some of the water from the brine instead of having them evaporated all into the air to produce lithium, which would be a very nice commercial solution and a big win, I believe, for both companies. And then we're also conducting a hydrogeological study right now, looking at a deeper source of water, which would be in the fractured bedrock, well below the brine system, which effectively has water flowing from other sources outside the valley, is tied into a larger aquifer system. And so that work's all underway as part of the pre-feasibility study. And I think making some announcements around solutions to that will also be very, very big catalyst for the stock in the coming couple of quarters.
All right. So just on the MET results, Greg, when should we start expecting those?
I think you should start expecting them in early June. We've got some very good progress that we're making now, particularly around some of the solid liquid separation, which has been most of the clay deposits. That's where they have their challenge. And I mentioned we're seeing some very positive outcomes in our ability to settle the leach product and filter it, as well as wash it to make sure we have minimal lithium losses. So we're just in the coming weeks, we've got one of the major filter thickener suppliers, equipment providers in the laboratory doing an engineering detailed test work on that. So as things start to become available, I think early June we'll start to see some flow of news on recoveries, etc.
Okay, so then the PFS could potentially come, or still is on track to come at the end of the year?
We're still saying 2023 for the pre-feasibility study. And like I mentioned, it's so important for permitting purposes that we get the PFS right, the size of the plant, how we're producing acid, which we're producing on site, how much power we're generating when we produce that acid, whether we have access to be able to deliver into the power grid or whether we have to consume a bit of power to make our flow sheet work. Those are very important things to have outlined properly in the pre-feasibility study. So we're going to take the time to make sure that work gets done well so that we don't have any setbacks in our timelines on our permitting once we initiate our baseline studies in 2024.
All right, sounds great. So Greg, last question here. I'm just going to ask you to summarize all the catalysts that you have coming in the next 6 to 12 months.
Yeah, so summary of the catalysts, the main ones, we're going to be the optimization around the high-grade core and the mine plan from SRK. We're hoping to be able to announce that to show that we have a good 15 to 20 years of much higher grades to be able to base the start of the project on. And that'll have a knock-on effect on the capital costs of the project, as we mentioned. It's a very important catalyst. The laboratory results, as Alina, as you were talking about and asking about, augmenting that as well, obviously pulling together a solution to the water, and then ultimately the pre-feasibility study itself as we start to finalize that engineering and wrap it up in terms of net present values and IRRs and all those important things.
Well, that's great. A lot to look forward to in 2023. So with that said, Greg, I just want to thank you for taking time to host this webinar with us today. Just as a reminder for our participants, our next webinar will feature Calpeo Minerals, and that's next Tuesday, May 9th at 9 a.m. Eastern. Thanks for tuning in with us, everyone. Have a great day.
Thanks, Elena. Bye now.